Hello and welcome to Big Deal. I'm Nisha Poddar. Now, the consumer electrical sector is a very interesting space and is becoming more and more interesting at this life cycle, with M&A as well as consolidation play likely to pick up in this space. Now, today I have with me a panel of experts to dive deep into the sectoral trends as well as the outlook going forward, including the potential that it carries. Let me welcome on the show Anand Ramanathan, who's from Deloitte India, Rahul Arora of Nirmal Bank Institutional Equities, and Rajesh Uttamchandani of Syska Group. Gentlemen, so good to have you on CNBC TV18. Now, Rahul, I want to understand, this space is much smaller. A lot of brokerage firms also do not have the full coverage of this space, except a few big companies like Havells as well as CG Consumer Electric. What is your view on this particular sector and what can be done for more value creation? How do investors look into this?
So, Nisha, thank you for having me on the show. So, I think the most simplistic way, Nisha, to look at it is, the commentary that HDFC Limited typically gives. And that basically says that if 65% of India's population is under the age of 35, the average age of an Indian when he buys a home is around 37, 38. So that gives a very, very long runway for growth as far as housing is concerned. And if housing as a sector is going to continue to do well, this sector is a second order derivative, which will obviously continue to do well if housing does well. So that's sort of a simplistic way of looking at it. If you dive a little deeper, obviously, the sector has many nuanced parts to it. You go into appliances, electricals, cables, wires, fans, so on and so forth. But I think if you look at it in aggregate, Nisha, the way we're looking at it over the next couple of years, I think these companies, some of the ones that you spoke about and the other listed entities also, we're fairly sanguine that they could continue to grow their top line by about 15, 16%. The good part, of course, Nisha, is that commodity prices, and a lot of these are very heavy commodity-driven businesses. And now with commodity prices coming down, I think there's a case for EBITDA and PAT to compound at about 22, 23%. The only probably concern that the sector has today, Nisha, is valuations. Because, if you throw in a Polycab, Orient, a V-Guard, all of that into the mix, then all of these companies are probably trading at about 30 to 40 times on an FY25. So I think valuations in a near term are not entirely supportive. But if you look at it broadly, with the fact that housing demand is likely to be growing and these guys are going to be beneficiaries, and the fact that commodity prices are now probably going to go in your favor, this looks like a sector that could steadily compound its top line EBITDA and PAT by 15, 20%. So, when we talk to investors, there is definitely interest, but, like they say in life, everything at a price point. But since we've been tracking this sector for over a decade, I think structurally we remain very, very positive on this.
All right, very positive, and some of the factors which are going to turn into a positive scenario for this particular space. But I would say that, the small ticket appliances or the electricals like fans as well as lighting especially are more akin to fast moving consumer goods in the electronic space. And that consumption has that potential been totally, capitalized upon is to be seen going forward. And of course, infrastructure as well as construction push are going to be two important factors going forward. But let's take it to a founder of a company. Of course, Rajesh, you are in a very, very differentiated space. You have cut a niche for yourself, especially in energy saving LED lights. How is the sector and the potential looking for a player like yourself?
Rightly asked. Actually, this trade is down the line from 4 or 5 years. Business is improving because we are the first mover advantage. We got the first mover advantage by bringing LED space, and that is the rightly said. It is a power saving, and since in this trade also it is related with semiconductors, so the technology is frequently changing and the prices are going down, and on that basis quantity are increasing, so you don't find so much top line have changed in LED lighting space. So business is improving, business is increasing, and rightly said by the sir that space is every time it's a growth space, and a lot of infrastructure and all is increasing in India. So it's a really a good trade, but the prices are increasing because of the change of technology. Previously, it's was driven by the driver and all. Now the DOB technology has come from where the consumption of aluminum in any LED product has gone down. So prices have gone down. So volume has increased. So you don't find too much a change in the top line of any company.
All right. So technology also has a huge role to play as it's evolving, and also energy saving as a thrust and as one of the biggest talking points where all the industries are steering towards. So that's also one important space that this particular industry is moving towards. Also, regulations are also getting aligned to rating the products based on energy savings. Now, Anand, Ramanathan, in the immediate future, how do you see, because this is one sector which is also attached to cyclicality of commodity prices, and on the other hand there is seasonality factor attached to it. So how do you see it at the very moment when we are at the cusp of monsoon season?
Sure, Nisha. So I think, yeah, you just touched upon it, right? So the monsoon is going to be really critical for not just this sector, but many of similar sectors which depend on rural India for their revenues. And you will see that there will be a cascading impact post monsoon in the festival season also. Typically, there's a sales uplift which happens during the festival season, right? So it is very important that we don't have this current deficit situation in monsoon continue. We will need for this situation to correct. And on the back of that, a good festive season will bring in cheer to this sector, because otherwise I think it's a good sector to play in. There is potential and there's headway to grow, but it is important that in the immediate term, some of these external factors play out in a way which is conducive for growth in this sector.
Right. So, Anand, let's also talk about the big, play that could be expected in this space, mergers and acquisitions and consolidation. What are the factors which are going to really drive this player in your view?
So, and not just this sector, but a whole host of sectors, there's a lot of unorganized market which is getting organized as we speak, right? And a large part of this is also regional in scope. So in that sense, we will need complementarities in terms of markets for M&A activity to work. And while it is important to look at synergy, it's also equally important to look at execution, because tactical things like distribution, looking at the influencer community, right? Because whether it is commercial or residential, you'll have electricians play a big important role. How is it that you take advantage of all of these demand side factors using technology and integrating in a way where ways of working, right, might be very different in each of these companies which come together. So how do you execute in a way where there is synergy that comes in and there aren't too many execution challenges, right? So that's going to be really critical as we look forward. Otherwise, it's a very attractive sector for consolidation.
All right. So the word is out from an expert that it's very attractive for consolidation. Rajesh, what is your view? Of course, smaller companies in your space, because of the regulatory requirements, the costs are high. Sometimes raw material prices also put a lot of pressure, which the smaller players cannot deal with. And it's a very large unorganized market in your area. Do you think that it is ripe for a lot more consolidation? And while the government is moving towards more uniformity and standardization of products in energy savings, do you think this will become a norm where the smaller players will not be able to adapt to it?
I totally agree with that because a lot of local players are there, and they don't bound to be all compliances. They have to be regulatory compliances, all they have to do. So if government is strict on that, definitely it's a time of consolidation. But it's not for Syska. That I want to clear you, because I am seeing some screen is showing something.
Right. But Rajesh, we did put out a story. Would you be open to a private equity investor also coming into the company for fundraising then?
Right. That we are there always.
Right.
And we want mostly see, I always feel we are keen on any joint venture outside India who brings the technology, R&D and design.
Yes.
Because tomorrow, if the company wants to go globally, you should have player like that who gives all technology, R&D, design. And it's not related with, as sir said, most of the people of age of 30, 35,
Right.
they are mostly connected with IoT technology and all.
Yes.
So, and what is the beauty in LED? It is all related with IoT products. So anything can be brought from the outside India or in India that is needed, and how any brand can be upper with other competition or local player by getting some premium product, by getting some different products from the local players. So definitely young people, they definitely want to choose those products. That is the beauty in India. Then it's not alone price. Now you find people give respect to the brand, people give respect to the quality, and people give respect for the product which are different.
That's right, Rajesh. Of course, reliability as well as the brand recall is one of the mainstays of the consumption products like yourself. But Rahul, very quickly, how do you see the M&A and consolidation play out? And of course, after the break, we'll take it forward in details.
So I think, Nisha, they have to be complementary skill sets to go in for an M&A. I mean, if you look at what's been happening over the last few years, you've had Crompton itself that's gone in for one acquisition. You've had V-Guard and Sunflame. V-Guard very prominent in the south, Sunflame very prominent in the north. Or then, so either you have geographical complementarities, or then you basically have product complementarities. And I think then you have to determine on the kind of price that you pay, because I think both these acquisitions that I'm talking about happened at about between 1.5 to 2 times sales, if I'm not mistaken. There was one of Eureka Falls as well that took place. The only point here, Nisha, is while the top line story is intact, how each individual acquired company is managing their costs and profitability. Because I think if you look at the Crompton acquisition, I think it was almost 80 or 90 times profit, but the acquisition that V-Guard did was about 20 times profit. So a lot of it depends on how you're allocating capital and what you're hoping to get as a return on invested capital. But I take your point that you were discussing with the other panel members as well. I think there is still immense room for M&A in this space, largely because it is unorganized. But I think there's probably a little bit more acquire strength in cables and wires, Nisha, because I think that's slightly a lesser fragmented industry than say compared to lighting or fans, which I think have a lot more competition going in. So I think when you look at cables and wires, I think people like Havells, Polycab, I'm sure they'll be on the prowl for certain good assets, and I wouldn't be surprised if in time to come you see transactions happening between 1.5 to 2.5 times sales, and broadly say around between 15 to 25 times on profit. So so as they say, watch this space.
Right. So you have broadened the horizon of the discussion by putting in the wires and cable space and the requirement of M&A there as well. So the House is united that there is consolidation and M&A play in the consumer electrical space, and there are specific reasons for that. We'll discuss more about the sectoral trends, the technology, and what's going to drive the consolidation and what needs to be watched out for right after this short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal, and we are discussing the various trends, potential of M&A as well as consolidation in the consumer electrical space. Now, Rahul, we touched upon the consolidation play that could really play out and the requirement of it. But one question that I got after rolling out a story on CG Consumer Electrical from a lot of people is that how will the sale of this company take place? Because there is no promoter in that company. And of course, the private equity players like Advent and Temasek made their exit some time back. without having managed to sell it to a strategic player. What are the aspects to be watched out here, and what do you think about this play?
So I think it's a fantastic asset, Nisha. I think I'm not sure if, I do understand that there is some sort of an advisory committee and a remuneration committee that's been formed, and that makes the appointments. But I think, this was a company that was at one point operating at almost 35 to 40% return on equity and return on capital employed. I think the brand is extremely strong. Were this company hypothetically to be on the block, I think it's not a very hard transaction. I think, it's predominantly an institutional investor held stock. I think if you look at Mire, HDFC, SBI, DSP, I think pretty much all of them are holders of this. So it'll pretty much have to be through block deals and open market transactions, or it'll have to be done, in the block window at a predetermined price. So I don't think that's going to be much of an issue if this combined entity is to sell. The fact that it doesn't have a promoter makes it interesting, Nisha, because I think, in all the other companies, whether you look at Havells, Orient, V-Guard, Bajaj, these are companies that have been in the business for 30, 40, 50 years. And, there is obviously someone taking a strategic decision and having a professional manager execute it. This obviously is a bit of a handicap in Crompton, but, I think the point here, Nisha, is even to buy a controlling stake in Crompton today, the market cap is 18,000 crores, right? Even if you were to take managing control at 51% on today's price, you need about 9,000 crores. And I don't think any of the competitors, even someone as large as the Polycap, can go in ahead and do it on the cash basis. Yes. So I think you're looking at a leveraged buyout or a debt-funded acquisition were this to happen hypothetically. But I think it's a great asset, even though it operates at about 20% kind of return ratios today. Yes. I still think this, even though the growth rates will probably be a little lower, I think, maybe a solid hand coming in and sort of giving in that direction, you never know. I think it's a good asset, good brand equity. And like I said, it's likely to be an LBO if at all it happens.
Right. And, there is a lot of complementarity when it comes to the product bouquet that CG Consumer Electrical has. And a lot of strategics could be interested. But, since it's a listed entity, even a merger, because the valuations are quite expensive for other listed companies, they can really use their expensive equity value to really cut a transaction here as well. So that's one aspect. But I would just state one thing, that while we want more professionally run companies, a lot of investors are more stuck up on promoter-driven companies when it comes to an M&A transaction or looking out for the growth prospects for future. Well, this is one of the examples of a truly professionally run company and also very, very widely held. So we'll have to see how the M&A really pans out. But on the other hand, Anand, what do you think in terms of the factors that must be looked into? You spoke about integration as well as synergies. A lot of people look at distribution as the strongest play for a company in this particular space. And on the other hand, the geographical and the product complementarity. What is your view on the main factors?
Sure. So I think distribution is critical. And when it comes to distribution, see, it's not only B2C, right? It's also B2B. And hence, key account management is also a very important capability. And beyond that, like I mentioned, the influencers, the electricians are like really critical to manage. Thirdly, also on the product portfolio itself, right? Given the opportunity in India across urban as well as rural spaces, do you have a portfolio which is relevant across regions? Given the differences in weather patterns, seasonality, if you are present in different parts of the country, I think South is going to be very different from the North or the West, right? In terms of seasonality and the relevance for some of these products during some seasons. Yes. And hence it is important to look at managing the risk, right? In terms of balancing the portfolio and ensuring that your products are diversified enough for you to avoid too much of working capital and fluctuation around managing seasonality.
Right. So those are important factors. But Rajesh, I'll have you let you have the final word on the discussion. What is it that, companies like yours in this particular space really require from the government in terms of regulations and support? What is it that the government can do? You did elaborate on how your product portfolio is quite compliant with the new age technology towards which the sector is moving in IoT. And you also said that you want to be a global player. You don't mind a collaboration. But where is it that the government can support this sector?
See, in my thought, people thinks or everyone thinks this is a very small sector, lighting especially. It's a close to 8,000, 10,000 crores. So we want support from the government. Lot of the components which comes from the China, Taiwan or Korea. Most of the players should come in India and make for people like a company like us. If government support in that segment, if those components should be made in India, then the prices is already, we can fight with the Chinese prices and all today. So if those prices are still some discount or some incentives we get, so we can export it very well all over the world and the brand can become very popular.
That's right. And also R&D and innovation can be given more support by the government, and also it could be one of the candidates for the next set of PLI schemes being rolled out by the government. It's all about manufacturing here in India indigenously. All right, gentlemen, thank you so much for joining us on this riveting conversation. Anand, Rajesh, Rahul, thanks so much for your insights. I would say that definitely there is a pickup and a lot of action in the consumer electrical space for various factors that we have really discussed. And this is one space to really watch out for in the equity market as it expands its space. And on the other hand, the infrastructure push given by the government could increase the volume play. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in and stay tuned to CNBC TV18.